Okay, guys, so I wanted to do this video since a long time ago, and it's gonna help you a lot. Okay, so this is called the initial balance. That's the original name of this concept. Okay, it's also called direct range. Yeah, I just call it like the first hour of the session. Okay, the hourly range. And what does this means is that whenever you have price, okay, let's say we have the New York session, okay, and it makes this low and then it makes a high, okay. So let's say the New York session starts from, just 1 second, guys. Okay, guys, so during the first hour of the New York Stock Exchange session from 9:30 to 10:30, usually price is gonna make the low and the high, okay? And you're gonna see, for example, you're gonna mark up, okay, your lows. So for example, this is the low and this is gonna be the high, right? Created during this first hour of the session. Now, if price, okay, if price closes above the high and breaks, that means we're gonna have higher chances, higher probabilities of price continuing bullish, okay? So when this happens, not always it's gonna break out. That's the important thing, okay? It's gonna break out and sometimes it's gonna retrace. But what are we gonna do is that we're gonna measure half of this, okay? This is gonna be the range. So you're gonna measure half of it, and usually price it's gonna visit the 50%, okay? Now, not always it's gonna do this, okay? So the important indication is that we have this breaking above the high of the range, okay? So this is our indication that price is gonna continue bullish. When you see price dropping back down, it's gonna do either one or two things. It's gonna either, so let's say we have our breakout, it's gonna either bounce from the edge of the range and continue going up, or it's gonna visit the 50%. Or there are gonna be cases in which it's gonna go to the extreme low, but it's not gonna violate this low, okay? By this time, we're gonna know that this low is the low of the session and it's gonna be respected, okay? So it's gonna happen, one, go to the edge, two, go to the 50%, or three, it's gonna go to the extreme, okay? So what do we do in each case is, for example, if it goes to the edge, okay, what is gonna be our target? We're gonna measure this, okay? So let me take the tool that measures. Okay, so you're gonna measure from the 50% to the high, and that's gonna be one standard deviation, and your first target is gonna be that measurement is gonna be your TP1, okay? Usually price, it's gonna visit this high, okay? Now let's go to scenario number 2. So we have our break above, okay? So let's say price continues dropping and it makes support at the 50%. How are you gonna trade it? Very simple. You're gonna take your, I usually wait, okay? I usually wait for confirmation. I wait for price to make a support, and I will see some sort of a bullish engulfing candle. I mean, that comes to your criteria, right? Like depending on how you're trading, it can make a double bottom, support, bullish engulfing candle, and you're going to target this high. That's going to be your first target, okay? Because usually price, it's going to visit back again this high, okay? So that's for scenario number 2, whenever price comes to the 50%. And we have scenario number 3, which is when price visits the extreme low. Okay, same thing. You wait for a double bottom, you wait for some sort of a confirmation right here. And in here, you can target the whole range, okay? Whenever this happens, due to the fact that we had this confirmation right here, price closing above, that means that we have higher chances that price, it will continue being bullish, okay? So I hope you understand, guys. Let me go, we're gonna go and see some examples of this concept. And the same thing happens for a bearish scenario, okay? So let me just do a quick diagram for a bearish scenario. So let's say price breaks below, okay? So price breaks below. This means that we have higher chances of price continuing bearish, and this high is going to be respected, okay? So same thing, we're going to have scenario number 1, which is price visiting the edge of the range. Scenario number 2, it's going to be price visiting half of the range. And scenario number 3 will be visiting the extreme high of the range, okay? So in a nutshell, okay, in a little summary of this is wait for the first hour to create the range and just wait for a breakout. And that's going to give you the direction for the next hours, okay? Don't wait too long, because if you wait too long, it's going to be invalidated, okay? And also avoid, I avoid like the high impact news day. At least the worst, I think the worst, honestly, would be the rates. That's the worst, because since we have Powell speaking also, honestly, like nobody knows what he's gonna say, okay? So the rates are this type of news that will affect long term. So it's not just like, let's say NFP, right? So we have NFP the first Friday of each month, and that's it. Okay, like NFP happens and then the market continues its way. But the rates, FOMC, it's a little different. So don't do this. I mean, this concept is basically just how the market moves, okay? And it's all about statistics, and it's just a matter of waiting. You can trade however you already trade, but you can just apply this to know the direction, okay? Just to know the direction of what's going to happen next. Because also there are going to be cases in which price is going to be inside this range, okay, between the low and the high, and you'll have to work inside this range, okay, guys? So another thing is, so let's say we have huge move up, okay, from the point. So let's say this was, and let's say this was a market open, and it just went too far to the upside, okay, from point A to point B, from 9:30 open to the first hour. Let's say price just went up in a straight line, right? That's gonna be a very, very bullish indication, okay? So usually just measure your fibs and wait for a retracement, and that's gonna be your entry, okay? So now let's go and see some examples. Okay, guys, so this was from today. There's this little indicator you can use, okay? That's the DRIDR. Let me delete all of this mess, which I had just in case price was coming back down.
Hey everyone, just a quick moment. Below is the QR code for my Discord server. Feel free to join. You can also add me directly on Discord at LGamer69. For more exclusive content that can't be uploaded on YouTube, check out my Patreon here, patreon.com/legendarygamerscyberzone.
Okay, so as you can see right here, this is the start of the range, 9:30 open till 10:30. Okay, so this is a range. We had CPI before, and as you can see, this was our confirmation candle. This one got a break above the range. Okay, so I was telling you guys in the groups that I wanted to see some sort of a retracement here to the edge, or coming back to the 50%, which it never happened. Okay, so as you can see, it did came to the edge, did this sort of like a tweezer pattern. To the left, we had this order block. In the lower time frames, we had an even better scenario, right? It was even better. 3-minute chart, we had this little candle right here, as you can see, which got respected. It was an order block, and the rest is history. As you can see, guys, price just kept going up. Let me see in the 15-minute chart how it looks. Also, it was pretty clean. As you can see, we had tapped into this level, which was the edge. As you can see, it was perfect tapping, and it just kept going. Okay, my entry would have been here, right at this candle. Okay, because it was pretty nice confirmation. It was kind of like a morning star pattern, bullish engulfing on the 15, or you could have taken these. You could have taken this bullish engulfing candle right here. Okay, and yeah, that's one example. Let's go and check another one. Okay, so this was from yesterday, same thing. We had candle confirmation breaking out of the range. I don't enter immediately because there's a risk of price retracing, okay? So usually you want to wait for the retracement. As you can see in here, it came back to the 50%. This was your entry. Now, I'm not a fan of taking like blind entries unless you have like some sort of a confirmation to the left. Otherwise, yeah, it's a little risky because let's say you put a buy right here. Let's say you put a buy, right? But what happens if price just keeps dropping? Okay, you're gonna lose. Honestly, I'm not very fan of doing that. It comes down to experience. Like I can do it any day of the week, even on the signal group in the signal room. I always do that, but that's just me. If you're starting, I would suggest you waiting for a confirmation. So for example, let's see what sort of a confirmation we had. I got lost. Where is it? Yeah, as you can see, guys, like on the 15-minute, we had this bullish engulfing candle. Maybe you could have taken the buys after this candlestick, okay? Made this sort of a support. We had the confirmation that price was going to continue going up. And it's just a matter of waiting and targeting the first standard deviation. This requires a lot of patience because it involves trading after the morning session. Usually you will get the PM session. So yeah, you have to be just a little patient. Okay, guys, so this is an example that I was telling you that whenever we have price going up in a straight line from point A to point B in the first hour, that means price is going to be bullish and it's going to retrace usually to the 50%. Okay, so as you can see, it gave two opportunities to enter. Okay, one was right here immediately after we had the first hour close, which was 10:30, and we had our range. As you can see, price started to retrace back to the 50%. And if you look to the left, we had this pretty nice order block or FDR, okay? So always try to combine this. This is not just one strategy itself, but it's kind of like a tool, okay? Because you will have to trade whatever you're already trading, okay? If you're like using order blocks, if you're using the 5-minute candle strategy, whatever you're using, you will have to combine it, okay? So for example, here always look to the left, guys, okay? So whenever price is retracing, always look to the left. My favorite retracements are the 50%. For me, that's the best, like for me, because usually I see price retracing to the 50% more often than any other level, okay? So for example, this was a perfect example of an example, right? This is a perfect example of price retracing to the 50%, and it was combined with this imbalance. We had an order block, and as you can see, we had this little candle confirmation and filled the gap, okay? Not the gap, but the range, okay? Which was the high of the first hour, okay? Or the range. And after that, I took these buys. Okay, so as you can see, this little candle right here, it was acting as a demand zone. And this candlestick was closing back above the 50%. Okay, so it was a beautiful bullish engulfing candle. And it was also some sort of like a double bottom, as I was telling you guys. And entry, I mean, I did took right here, okay? But you could have taken, let's say, the candle right here. Initially, your stop loss on below the low, and then you can place your stop loss below the next candle, okay? And target was, again, the same high of the range. Okay, so basically that's it for this video, okay? I'm gonna be doing more of market reviews with this concept, okay guys? So I hope you learned a lot with this video, and just make sure to keep it simple, okay? Just these three scenarios that can happen. Remember the edge, the 50%, or the extreme low. Same thing for a bearish scenario. Same thing, okay? Just keep it simple, look to the left, and that's it, okay? That's it for this video. Take care, guys.